What is going on, investors? Hopefully you guys had a great day out there. Time to talk about Amazon.com, ticker symbol AMZN, the last of the FANG stocks to report. This stock year to date is up 6%. Over the last year, up 50%. In the after hours trading, this stock is popping up above a high that we made back here in September that we have just not been able to get over with Amazon, and it finally has popped up. So we'll talk about the stock chart here towards the end of the video. We'll jump into the numbers. We'll take a look at the cash flows, take a look at revenues, profits, AWS, Amazon.com. We'll take a look at all of that because it is very important to understanding this company and maybe debunking some of the myths out there, people that don't like Amazon stock. I personally, full disclosure, love Amazon. I'm extraordinarily overweight this stock. Anybody that asks me what one stock they should buy for the long term, the answer is always, you guessed it, Amazon. So I'll try not to make this video as least biased as I possibly can. Now, EPS beat by $6.18. You know, if you follow this channel, I don't really pay attention to EPS. It can be manipulated in a number of different ways, and some things that are not related to the business, as we'll see here with Amazon, can flow down to EPS. So it's not a metric that I really look at. Really, I want to look with Amazon, this revenue growth, 43% year over year. 108 billion. No, not 108 million. $108 billion. That's not for 10 years. That's not for a year. That is in 3 months. You had $108.5 billion worth of revenue in 3 months. I mean, it's just unbelievable. So we've got net. Here's the key, though. I think this is what could be popping the stock. We had no mention of split, the stock split. People have been talking about how that could be helping run up the stock. And honestly, it wouldn't surprise me. You got retail investors that don't understand that a stock split doesn't really do a whole lot other than kind of create interest and hype. And look, you can trade off that. That's not a problem. But here's what I think has the stock moving in the after hours. Again, no mention of the stock split, at least in the press release. Could be in the conference call, could be something that is announced later after this video. But second quarter guidance, I actually thought this was interesting. Net sales are expected to be 110 to 116 billion. That is 24 to 30% growth compared to the second quarter of 2020. And let's flash back to the second quarter of 2020. Most of everybody in the United States was sitting at home, not working, and they had to order stuff online. A lot of stores were closed. So to experience that type of growth, or to be guiding to that type of growth, I actually think is beating expectations to a certain degree. I personally, one of the businesses I run is selling on Amazon. The second quarter of last year was bigger than any Christmas holiday I've ever experienced, and it might have been bigger than any Christmas holiday I'd experienced on Amazon combined. It was just, I mean, everything was selling. It was one of the greatest times I'd ever seen, and they're guiding between 24 and 30% growth in this quarter. That was phenomenal. So I thought that was interesting. The other thing that I saw that was interesting was their operating income is going to be 4.5 to 8 billion. Amazon always gives these kind of like wide ranges. 4.5 to 8 billion is a pretty wide range. It used to be even wider. They've kind of tightened it up a little bit. Now that compares to 5.8 billion in the second quarter of last year. So they're going to be somewhere in between there, potentially beating the second quarter. The other thing to keep in mind is Jeff Bezos is kind of on his way out. I think he's got another quarter or two before he's on his way out. So what you'd expect Amazon to do with their guidance is actually keep it a little light so the new CEO can kind of handle the conference calls, can kind of handle investors like maybe pressuring them. So in some cases, it could be that they're sandbagging guidance just a little bit to make the incoming CEO's job just a little bit easier with investors. Because the last thing Amazon wants to do is have Jeff Bezos walk out the door and all of a sudden they start missing estimates. That would get investors freaking out. And so I'd actually expect these estimates to actually be conservative, or at the very least, Amazon to kind of come in at the high end. Again, that's more speculation than fact. The fact is, the stock is trading up in the after hours. Again, we'll get over the stock chart. We'll talk about what that means. Let's jump into the numbers. We got our old cash flow statement kicking things off with Amazon, one of the few companies that kick things off with the cash flow statement. So we got our 3 months ended here. This is 20 to 21. And then they give you a 12-month view. I thought this was interesting in a Q2. They give you a 12-month view, 20 over 21 as well. They show the cash at the top. Wouldn't say it's irrelevant, but it's somewhat irrelevant when it comes to Amazon. When you have $100 billion in sales, how much cash you have on the balance sheet, not really something, honestly, investors really care about. We pull down this net income number, which we'll see in more detail here in a second when we get to statement of operations, but we pulled down a gigantic $8 billion. Okay, notice last year in this quarter, we pulled down $2.5 billion. You see, for 12 months in 2020, they pulled down $10.5 billion worth of net income. They just printed 1/4 of $8 billion. So just we'll call it $2.4 billion shy of what they did all in 2020. So it's an impressive number. And if you annualize this number out, times it by 4, so to speak, well, you get to a number much bigger than where they were for trailing 12 months here in 2021. Now, lots of adjustments being made, okay? Add back in depreciation, which Amazon has a lot of, okay? $7.5 billion worth of depreciation, okay? Because they have a lot of equipment, plants, things like that gets depreciated. It's a non-cash expense. You've also got stock-based compensation, which looks like it's ticked up over the last year. That's sitting at $2.3 billion. You got some deferred income taxes. Don't think you can avoid paying those, but we'll add them back in for this sake. Net cash provided in operating activities came in at $4.2 billion. You were at $3 billion in the previous year, which was a strong quarter, strong start of the year. And you see for the last 12 months, you're sitting at just $67 billion. That's not $67 million. That's $67 billion worth of cash provided by operating activities. Not needless to say, that's absolutely phenomenal. Now, here's the other thing that a lot of investors kind of get lost about Amazon are these investing activities. Take a look in this quarter last year on purchases of property and equipment. They came in at $6.8 billion. That's a lot. Okay, that's more revenue and certainly profit than probably 99% of the companies that are publicly traded. Well, look what they did this quarter. 12 billion, yes, 12 with a B, billion dollars worth of purchases of property and equipment. So instead of buying back the stock like Apple and Facebook are doing, and Microsoft and almost all the FANGs, I think Google as well, instead of paying dividends like an Apple and a Microsoft, well, what do they do over at Amazon? They just reinvest in the business. That's why I really, really like this stock, okay? Do I like buybacks? Do I like dividends? Sure. Do I like companies that are aggressively growing like this? I like that even more, especially when I want to be overweight a stock, kind of make a long-term bet. $12 billion is, look, in all of 2020, they spent $20 billion. So they just spent 12 in a quarter, just showing you the rate of investment just continues to pick up. Now, they kind of refinance some short-term debt down here in financing activities. All things being considered, cash flows are exactly what you're looking for when it comes to Amazon. Now, here comes the exciting part. We get to look at the statement of operations. These are in millions. We've got 3 months ended here. 2021 is our right-hand column. That's our most recent quarter. Last year, we're sitting at 2020. That's going to be our left-hand column. We've got our net product sales coming in at just it's not 57 million. That's $57.5 billion worth of sales in 3 months. That's not 6 months. That's not 12 months. That's not in your whole life. That is in 3 months. I have to emphasize this because when you look at these companies, the numbers are just extraordinarily impressive. Now, net product sales last year were sitting at 41.8. I thought that was pretty amazing, and we just bolted on, we'll call that about $16 billion over the last year on our product sales. Now, on the net service sales, that grew nicely as well. You went from 33 up to 51. Just impressive. And that took our total net sales up over that $100 billion mark to 108.5. So 108 billion and 500 million in sales. Again, I want to point out that they're guiding Q2 to be 110 to 116. So that is impressive. This is an impressive quarter. They're guiding to a Q2 that's equally or even more impressive, in my opinion. Now, operating expenses. It's not the full story with Amazon. Guess what? They are having to spend mucho money in order to get these sales. Cost of sales coming in at $62 billion. Fulfillment, $16 billion. Technology, marketing, general administrative. That gets us to total operating expenses at just a shade under $100 billion. Okay, that is a lot of expenses. Last year they were sitting at about 71 billion. So it's not like a Microsoft, it's not like a Google, it's not like a Facebook that has just these incredibly succulent, gigantic margins. Okay, this is a company that is, really has to drive this top line, continue to have this grow. In order to have this top line grow, they have to invest a lot in this business. It's a labor-intensive business. It's a property-intensive business. So that's why, while I'm bullish Amazon, I don't have my whole portfolio in Amazon, okay? A good portion of it is in Amazon, but there is some value to those higher margin tech companies out there. So I just wanted to point that out, kind of balance out, my love for what we're seeing here. This is relatively low margin. Take a look. Operating income. So off this $108 billion, I want to say only $8.8 billion of it flows down to the operating income side. But what I want to show you, though, is look, last year we're sitting at $4 billion. Okay, that's rounded up. So you've more than doubled over the last year your operating income. So it's just a fantastic, that's fantastic growth. Not necessarily saying they're going to continue to double that year after year, but if you can get that type of growth, well, this company is really going to grow into its valuation and continue to grow in the future. Now, we pull some things down. There's some stuff that comes down here and flows into net income. But what I want to point out to you, though, is net income's $8.1 billion. That's factoring taxes, interest, some other stuff. Well, it's very close to this operating income. Okay, it's only $700 million off of this operating income. So I'd analyzed the company from this operating income perspective, and it is fantastic. Okay, the fact that it is so close to this net income number, you really actually can kind of take some credence in this diluted earnings per share at $15.79. That's a huge number considering last year was sitting at $5.01. You 3x'd your net income, or at least your earnings per share. Just absolutely phenomenal over the last year. Now, let's move down to the segment information. I like to look at this too, because this there's some myths out there that Amazon only makes money on AWS. They don't make money on Amazon.com. It's simply not true. For one, they are reinvesting lots of money. So when you look at these operating expenses, there's a lot of investment here. Okay, when is that going to tail off? I don't know, but let me just show you a max chart of Amazon. Does it matter? Look at this max chart of Amazon. Okay, it's especially over the last 5 years. This thing is up. Over the last 10 years, this thing is just kind of like a ski slope. Do I really care that they're not printing huge amounts of money to the operating income side? Maybe I personally care, but the thing to always do is go look what the market cares about. Does the market care? No, it doesn't, because look, in 2013, this stock was at $200 and now it's at $3,500 and some change. So North America net sales growing nicely, 46 up to 64. Operating expenses, obviously you're going to grow in line with that, but we grew our operating income from 1.3. I mean, we almost tripled it to 3.5. We'll call that $3.5 billion. Here's the exciting thing. This international business with Amazon has not been profitable. Okay, it has not been profitable, but it hit a turning point. I remember maybe the last quarterly report that we reviewed of Amazon, they turned the corner. Okay, last year for the 3 months, they actually lost, we'll call that $400 million. It was basically a break-even business for them internationally. Take a look in the most recent quarter. We have turned the corner internationally. Okay, we've got $30.6 billion in sales, got some operating expenses. We print $1.2 billion to that operating income side. Now, can international become as big as the United States? Potentially. It's already halfway there, and almost halfway there. Okay, a couple $100 million off of halfway there. That is extraordinarily impressive, in my opinion. Okay, so this international business is starting to contribute to that bottom line as well with Amazon. Now, finally, you've got the wildly profitable business down here at AWS, and you see here net sales look like they increased about 30% here, and we came up from $3 billion up to about $4.2 billion in operating income. So here's the deal. Look, North America is almost as high in terms of operating income as this AWS segment. So investors like myself that have been believing in Amazon for a long time understood that this Amazon.com, this international business, it was going to take a while for it to catch up to AWS. At some point, I actually think probably in the next 24 months, the net sales, the operating income from North America, certainly if you combine it with international, it's probably already exceeding AWS or very close. I think just North America will become a bigger business than AWS. And actually, intelligent investors that have been long Amazon for a long time understood this and actually appreciated it and actually benefited more than the people that have been short Amazon or have avoided the stock due to those types of myths that are out there. Now, segment highlights. So we've got our year-over-year sales growth, 40% in North America, 60% international. So AWS is growing in that low 30s. We saw Microsoft is growing Azure at 50%. I don't know the percentage of Google off the top of my head, but I want to say it was at least in that 40 to 50% range. So those companies are growing a little bit faster, but they're coming in at a lower base than AWS. So still, low 30s growth on AWS is very nice. You see over the last year, the consolidated growth rate accelerated from 26% all the way up to 44%, really buoyed by international and North America, Amazon.com, just your common sales off of that. So all things being considered, things are looking fantastic. And you see here the sales mix, AWS is actually becoming kind of a smaller part when you take in account that international and North America are either staying flat or growing, and AWS is staying relatively stagnant. So moving on to the balance sheet, probably less important with Amazon, and this is why the CFO decides to actually put this document last. And we see cash and cash equivalents, marketable securities coming in at about $84 billion. This was at the beginning of the year. Here, our right-hand column is the most recent quarter. You're sitting at about 70 some odd billion dollars. So they burned through some cash, which is understandable, honestly. So you've got some inventory here as well. You've got some accounts receivable. I would say a lot of the assets in this company are different than a lot of the other tech companies we look at. They have a lot of property and equipment over at Amazon. Take a look. That went from 113 up to 121. It is a property and equipment and actually kind of in personnel, employee, headcount kind of, it's a business that needs a lot of that. Okay. Amazon is different than some of the other FANG names and certainly the other tech names. Okay. So you have to be comfortable with that as well. Now, from a liability perspective, we got some long-term debt here. It's sitting at, we'll call that $32 billion, basically flat, but they have more than that just in cash. In fact, they have almost double that. In fact, they have more than double that. So to grow a business to over $100 billion in quarterly sales, and I want to say only have $31 billion worth of debt is, a feat that is very, very admirable. Okay. Obviously they've raised a ton of money from, guess what? Investors. Okay. So this stock has funded this growth because they haven't had to take on a lot of traditional kind of debt that other companies may have had to take on to reach these types of heights. Now, what's important is a lot of what we talked about is important. The EPS, the guidance, everything. What's important, though, is how the market reacts to these types of things. And the market is pretty much loving it. Now, the stock is up quite a bit here in the after hours, but what I want to show you is back in the beginning of March, which is not that long ago, this stock was at 2,900. And even more recently, this stock was at 3,100 really at the beginning of this month. Okay, just a couple weeks ago, it was at 3,000. We have put on $500 to $600 per share on this one, and we broke above kind of a critical level up here at made back in September. We were sitting at right about 35. We'll call that 35.50 on this one. And we've broken kind of a solidly ahead of it. And so here's what I think could potentially now happen with Amazon shares. Okay, will it staircase up like Google? I don't think so. I don't think this is this type of business. And I think a lot of Amazon's growth is kind of priced into the stock already. But this 35.50 level was now an area of support. We actually came right up to it today, kind of pushed through it. We were back here. Now this 35.50 level on the way back down. If the stock takes a breather tomorrow, we saw that with Apple. We see that with some of these FANG names that the day after, they kind of take a breather after popping in the after hours. I think you have a logical spot where this thing could rest at 35.50. So I'm a long-term holder on this one. I don't really care what it does over the next honestly, year, 2 years, 3 years, I'm not really too concerned, but I could see us coming down, taking a breath down here at 35, at 35.50, and then eventually starting that kind of next leg where you start heading higher on this one, 37, 38. Is it going to get there next week? Honestly, it would probably surprise me, but I could see we consolidated sideways on this one from the end of September all the way to the current date. This thing was in I wouldn't say a tight range, but between 3,000 and 3,500, it just kind of waved sideways for a long period of time. So it wouldn't surprise me, honestly, if for the next 3 to 4 months, Amazon does something like this, where we start waving out something, something like this, where we're sitting here at 3,600 and this stock just kind of waves out to the side like it has over the last few months that it has. And we just kind of wave between 36 and call it 39, maybe 38, something like that. I think that actually would be healthy for the stock. It would allow the new CEO to come in, kind of cement his own legacy, kind of cement his own ideas on the stock. All things being considered, though, Amazon absolutely crushed it. The stock split made no difference. It made no difference to me or any sophisticated investor whether they had a stock split. Quite frankly, I actually prefer that they don't split the stock. I actually like that it's this expensive. It's much harder to short a stock that is that expensive. And I like this stock for the long term. Let me know down in the comments below what you think about AMZN.com. Hopefully you guys enjoyed this video. We'll be back, of course, with more again soon. Good luck with your investments.